It is Friday, July 7th, and oil prices on Brent are trading a little bit up, actually, 76 and nearly 77, and having a second positive week, a slow but incremental reaction, perhaps, to the recently announced cuts by Saudi Arabia and Russia. But nonetheless, it does seem like a market that's still struggling to break away from $75 a barrel on Brent, a little bit up, a little bit down, but ultimately in that spot. We're joined by our regular commentators, but spread across the world. I'm not even sure what flag Dr. Carol Nachtley, Chief Executive Officer at Crystal Energy, is sporting today. The last time I looked at the slide, I could have sworn it was Denmark, and now it looks like it's Poland. But either case, I'm in a taxi going to Heathrow. So we're all on the move. And I've been in Europe this week at the OPEC meeting in Vienna, and then an interesting Oman FDI meeting in London yesterday. But Peter McGuire, XM Australia CEO, I'm taking some trend guidance from you over the holiday season here, Peter, sporting beard. But I wanted to, Peter, get your views on the other big story of the week. Carol mentioned China. I'm not sure if it's migrating to be of relevance yet, but we saw the foreign minister of the US in China in the last month or so. And now we've got Janet Yellen, the Treasury Secretary in Beijing. It would appear both trying to patch up or somehow move the relationship from China, between China and the US onto a more productive path. Your thoughts on that, on her visit and the relevance of it?
Well, Sean, and the beard suits you, so it's lovely to see you.
Yeah, you like that, huh?
Yeah, you look pretty sharp.
There's still a little black in there somewhere, but
we're got a bit of boot polish out. Look, there's no doubt that Janet Yellen, she's trying to create a piecemeal, and we're looking at that, and we're conscious of the fact of where China has been, and it's really languished since pretty much April. Their stock market's done okay, but it's certainly nothing like what we've seen in the likes of the Nikkei or of course, the US market. And she's there to try to appease the Biden administration moving forward to, I think, well, a bit of hand holding and probably a bit of handshaking. I'm not sure what she's going to actually achieve out of it, but I'm very conscious of a couple of things building on what Carol mentioned, as far as the services sector, as far as growth and where we're looking in the second half after we've seen an enormous first half as far as equities, and the US market and what the Fed's going to do. We're pretty much baked in now with a 25 basis point hike by 26th of July and another one later in the year, Sean.
Peter, do you think on that point, I mean, the Fed tightening cycle, it's obviously been dramatic over the last year, fastest rise, I think, in history.
Yes.
But yet it has had no impact on labor markets as of yet, certainly in the US, and very little impact on oil demand. Should we even care at this stage about these further rate rises from an oil markets point of view?
Well, I think it's going to have an impact because it will impact, I would say, demand somewhere along the line, Sean. There is no doubt when you're looking at that 2-year Treasury, it's at a 16-year high. So there's the first part. It must have an impact as far as to the wallet and the purse, as you know, from an inflation story, from consumption. There's that part. So thankfully, to a consumer's point of or viewpoint, oil prices at 70 or 75 bucks a barrel are far more affordable than 90 or 95. Now, if that was to change and we were to see higher prices, that would be, I think, a very, very heavy hand for Main Street to absorb. But, you know, I'm not sure how the second half play, but I'm pretty sure that you're going to see some excitement across US equities because it's been a jet-fueled rally for the NASDAQ, up 32% in the first half, the strongest first half since 1983, Sean. So it's absolutely flying. And then you've got the valuations are stretched. and earnings growth is stagnant. So I'm just looking at what PEs are doing. There's 19 times earnings for the S&P, and that's expensive historically to think that you're going to be at another start of a bull market. So
Well,
I just think
apparently everybody hates this market rally because everybody's missed it, including oneself here. That it's sort of gone contrary to the general narrative of the whole first half of the year: recession, recession, recession. The wolf that never arrives. Peter, the narrative that we all were very exposed to in the first half of the year of two halves of such, all has been based on really where Asia goes in the second half, and in particularly China. Is the year of two halves still alive, or is we Sean, just take it that it's now like the dodo?
Well, it's a very hard one. I mean, I look at the equity markets, and you've got to just be focused on them because of such huge demand and that fear of missing out, as you highlighted. And are we going to see that continuation for this quarter as far as move to the upside, or is there going to be consolidation, or are we going to see a sell-off? And that can change a global theme very, very quickly. So
does the equity markets tell us, obviously it's a future reference point to the economic outlook of profitability in 6 months or more. Are the equity markets telling us that 2024 is going to be a very profitable year for corporates, or are these markets still drunk on the sort of irrational exuberance of 10 years of quantitative easing and not necessarily the outlook of profitability of major companies?
Yeah, I think that free money has driven, it's been dramatic what we've seen since 2010, 2011 move to the upside, that 12-year window. So yes, I'd have
to say. But even of the last few years, I mean, the COVID stimulus still filtering through to the markets.
Well, exactly. I mean, that's been dynamic in what we've seen as far as a recovery of that huge sell-off we saw in 20 or 21, I should say, and then all of a sudden, boom, and it's just continues to drive. And what we've seen in the last 5 or 6 months, everyone expected the first half of the year, as you highlighted, to be slow, if not recessionary, and that just hasn't materialized as yet. But with the Fed and central bankers continuing to raise rates, then I'm just sitting here going, well, it's got to have an impact somewhere to someone someday, and that may not be too far away, I think, Sean.
Bill, you're sitting. Peter, I know it's winter now in Australia, so you don't get to go to the beaches often, but what will July and August bring for Australia and for Asia, do you think? Did we lose Peter, or I can't hear?
Sorry, Sean. Sorry. I think what we've got to be conscious of from Australia is, do we see additional rate hikes over this winter period? There's the first part. Are we, and I won't be surprised to see that, what's the health going to be like in China and the likes of the Philippines from a demand picture? South Korea booming, Japan doing extremely well from an equity standpoint, and a low interest rate policy. So where are we seeing, I think, opportunity for trading with the yen, and what's happening with, again, I get back to that equity markets because it's very, very toppy, and maybe that some of that froth might get burnt off.
I mean, just to close out, Peter, you're speaking about rate hikes should be impacting, filtering through and impacting different things. But you would imagine at the front end of that list would be equities. I mean, equities, profitability, the cost of carrying debt, which of course all these publicly traded companies carry a lot of debt. The price of servicing that debt has, jumped dramatically in the last year. And yet the equity markets are on the tear. Like the oil markets, should the equity markets care whether there's more rate hikes?
Well, I think they've got to care. There's no doubting that, Sean, as far as serviceability and bottom line. But the other thing is that it's just been such an AI-fueled jet stream of just, putting high octane gas in this, that it's lifted all boats. and maybe it's going to run out of a little bit of juice over the next, couple of months. We've just got to sit here because what we've experienced this year has been nothing short of extraordinary. 40-year high. This is not usual stuff.
And Peter McGuire, enjoy your winter. I hope you freeze your nads off down under, as we enjoy some sunshine here in the Northern Hemisphere. All the best, everybody. Have a
Thank you.
great summer.
Thank you,
Thank
Sean.
you.
See you, Carol. See
All
you,
the
Bill.
best.
Catch you, man.